Hey man, I'm Jusko from ProudMoney.com. In this video, we are going to look at banks versus credit unions. What is the difference between the two, and potentially is one better than the other? What are the pros and cons of each? And then you can decide maybe which one you think is better for you. Now, most people kind of know what a bank is. It is a place where you get checking and savings accounts, where you might get a mortgage loan, you might get an auto loan, you might get a credit card, other things of that nature. For some people, credit unions are a little more of a gray area. They're not quite sure what they do. But at their base, credit unions are pretty much doing what a bank is doing. The same checking, savings accounts, auto loans, mortgages, credit cards, etc. But the difference between the two is sort of structure and maybe motivation. So there's one major difference between banks and credit unions, and everything else sort of flows from there in terms of the other differences and the pros and cons of each. As far as banks go, they are for-profit companies, just like any other for-profit company. They offer financial products and services to you. They hope you are happy with them, but in the end, they want to make a profit. They want to make more in revenue than they have going out in terms of costs, like any other business. And then that money goes back to their shareholders in whatever form that might take, from a small community bank to a public company with thousands or millions of shareholders. So a bank is in it for the money in terms of profits. They are the business offering products and services, and you are their customer. Credit unions, on the other hand, are not-for-profit institutions, which means any money they make beyond sort of the cost of doing business ends up getting plowed back into the credit union with the idea that that is going to mean better products and services for its members. Higher rates on things like checking and savings accounts, lower interest rates on things like auto loans, mortgage loans, and credit cards. In addition, unlike banks, where the bank is a business and you are its customer, with credit unions, you are a member. You have to actually apply to be part of a credit union. And the idea behind credit unions, although it's not always really true in practice, but the idea is that there is a commonality among the members of a credit union. There may be a commonality in terms of geographic area where you work or live. There might be a commonality in terms of working for a particular large corporation, or maybe a government entity. There may be commonality in terms of military service. There are all sorts of reasons that a credit union is formed and different commonalities that happen. Now, many credit unions really stretch the boundaries of what that commonality is. If they want to grow for whatever reason, sometimes they will create sort of back doors for people to get into that credit union when they don't really have that much of a commonality with the other members of that credit union. Now, because of these differences, there is sort of a stereotype out there that banks are these cold, impersonal institutions that are just trying to wring every last dollar they can out of you, and they will add hidden fees into their products and services and other gotchas as a way to goose their profits at every step, where the credit unions oftentimes are sort of seen as these warm and fuzzy institutions that are working for their members to give them higher rates on deposits, lower rates on the loans, all of that sort of thing. And there is some truth to those stereotypes. However, not every bank is the same. Not every credit union is the same. There are humongous banks, the big banks that people talk so poorly about, but there are many small community banks that you might think of as being very similar to what you think of as a credit union, serving a small community with, that has that commonality and wants that personal service and all of those sorts of things. And on the credit union side, there are huge credit unions that really don't feel a whole lot different than a bank. And then there are a lot of very small credit unions as well. So there's nothing you can say across the board about a bank being better than a credit union or vice versa. You still have to look at each individually and still make the comparisons when you are thinking about checking and savings accounts, auto loans, mortgage loans, all of those sorts of things. Now, that said, I have come up with 10 areas where there often is a difference between banks and credit unions, even though it's not going to be true across the board. And you can think of these factors when you consider a bank or a credit union for whatever financial products or services you're looking for. Now, these aren't necessarily in a particular order, although I do think they build on each other. First is ease of access. As far as banks go, it is easy to become a customer of a bank. You can go online and apply for a checking account, savings account, auto loan, mortgage, credit card, all kinds of other products with the bank, or you can go to a local branch and do those things as well. Pretty easy to get everything set up. With a credit union, you have to become a member of the credit union before you can even go down the path of getting any of their financial products and services. So there's a little friction in there. Do you qualify for membership? Depending on the credit union, how long is it between when you apply and when you are actually told whether you have become a member or not? The bigger the credit union, probably the more seamless that process is going to be. Smaller credit unions can take time. So easy to become a bank customer, can be more difficult to become a customer of a credit union. Next is interest rates. Typically, you are going to get better interest rates from credit unions than you are going to get from banks, especially from the big banks. Credit unions, like I said earlier, plow their sort of profits back into the credit union with the idea that they are offering better rates to their members. So higher interest rate on savings checking, lower interest rate on auto loans, mortgage loans, etc. That is sort of the stereotype of a credit union, and it is often true. It's not always true, but it is often true. So you still want to check rates from a credit union versus banks out there to see if you are getting a better deal. But that is generally the idea behind a credit union, so most of them try to come through on that end of the bargain. Now, the next area to consider is probably the place where banks shine the most and is probably the single most important factor when people choose a bank over a credit union, and that is convenience. Banks tend to have more locations, longer hours, better technology when it comes to online banking, more ATMs, all of those sorts of things. And if you move from one location to another, especially if you're with a bigger bank, that bank brand oftentimes is going to be available in another city, maybe even in another state, where oftentimes with credit unions, they're going to have shorter hours, maybe not as good of an ATM network, and they are just not going to necessarily be something that you feel like you can count on in all cases. Now, some people would push back and say, well, even if your own credit union isn't available somewhere else, there are credit union networks. You can go to a different credit union to access your account through that, and there are ATM networks that, kind of work through these different credit unions. And these things are true, but it doesn't feel seamless. It doesn't feel easy to understand. If I am a Chase customer here and I go somewhere else, I'm still a Chase customer and I understand how it all works. With a credit union, you might not, and depending on the size of the credit union, they might not have all of those things. Again, this is not true across the board. There are small community banks that might not have as much, and there are huge credit unions that are almost like banks in terms of what they offer. But that is oftentimes a way that people think of banks versus credit unions and why they choose banks. The next area is what I call gotchas, and this is where a credit union or a bank may get you if you are not careful. So this is something that banks are more notorious for. The bank is more likely to try to get you with hidden fees and fine print, or they might raise your rates faster on your credit cards if you do anything wrong, give you the big upsell up front in terms of how great something is, but then kind of get you on the back end with details that you didn't realize were part of the equation. Credit unions generally are not thought of this way. They are working for their members and not trying to sort of trap them in order to make extra profit. Small community banks, I would probably not necessarily think of as places where you're really going to have the gotchas as much either. It's maybe more of a big bank thing, but still, this is something that is much more on the bank side of the ledger when it comes to the gotchas. The next area to consider is confidence. This sort of goes along with convenience, but this is about how you feel about your bank or credit union, how you feel that they are going to take care of you if you need them in a pinch. Oftentimes people feel better with big brands, and banks are good at marketing themselves to make you feel more confident, more secure in what they are offering, where credit unions, especially smaller credit unions, aren't going to do a whole lot of marketing, and even bigger credit unions are not necessarily going to be doing that. So you might feel with a credit union that you like the idea of it, but you don't feel quite as confident about being their customer as you would with a bank. The next area is ease of approval. Credit unions oftentimes are going to be more lenient on giving you a credit card, auto loan, mortgage loan if you are someone that doesn't have as much of a history with credit or with loans, or if you are someone that has had past credit problems, than banks, which tend to look harder at those credit histories and tend to be less forgiving. They want to make a profit on every loan that they give out, where the credit union can be a little more loosey-goosey, not crazy, but a little more loosey-goosey when it comes to giving out loans to people who they have a little more question about. So in that area, credit unions usually win. The next factor is product choice, product selection, and this is a place where banks are often going to win out. They oftentimes are going to have more choices when it comes to checking accounts, when it comes to savings accounts, types of certificates of deposit, when it comes to your type of auto loan, your mortgage loans, all those sorts of things. Credit unions oftentimes are going to have a smaller selection, especially if they are a smaller credit union. Your bigger credit unions are going to be competitive to some extent with banks, but in general, your bank is going to have a bigger selection of products, if that matters to you, than most credit unions. Next area is personal service, and this is a place where credit unions probably win in most cases, even though banks might be more convenient and you might be able to reach them 24/7 for many problems. That doesn't necessarily mean that they are going to be all that caring about you as an individual, where a credit union is probably going to be a little more caring about their members, because these are people that are supposed to have a commonality with them and they are supposed to give them better personal service. So this is a place where I would say credit unions on the whole win. Number 9 is what I call competitive motive. Banks are more likely to be motivated to compete than credit unions are on the whole, because banks are for-profit companies that are competing against other for-profit banks out there on the market, as well as against the credit unions. So they tend to do a lot of the things that we've already talked about: offer more convenience, offer more products and services, maybe more rewards on credit cards and more bonuses. They're going to do everything they can to sort of razzle-dazzle you and make you feel like they are taking care of every need you could possibly have, because they're competing against the other banks and they are trying to get you in as a customer instead of you going to somebody else. While credit unions do want to compete and they do want you as a member, they compete more on the fact that they are going to give you better rates and oftentimes maybe more personalized customer service than the banks are going to, but they're not going to do as much to market to you. They're not necessarily going to put as much into those things like convenience in order to make the experience better for you across the board. So banks tend to win here on that competitive motivation. And then number 10 is community. As you might guess, I would say in general, credit unions are the winner here. They are built on the idea of serving a particular community, whether that is a geographic community or it is some other commonality that creates a community. And oftentimes their members want to support that credit union because it might keep the money local, or it might support some sort of organization or idea that they want to support. So people tend to want to support the credit union because it tends to be more likely to support their local community, where the for-profit bank is less so. Now, obviously, there are many community banks that probably serve that same sort of purpose, keep the money local, and are not part of these huge bank networks. But in general, credit unions win out. So there are a lot of factors to consider, and you have to think about which factors are most important to you. And you also have to not necessarily fall into the idea that these stereotypes are true about banks or about credit unions, because you still want to check the individual bank or the individual credit union and see how you feel about them overall, whether you're looking for sort of a banking home with one particular entity, or you are looking for specific checking, savings, auto loans, mortgage loans, credit cards. So nothing you can say across the board, but think about what's important to you. Think about what you're likely to get from a bank or a credit union and go from there.